Hi, I'm Andrew Berman from the Mortgage News Network, coming to you from the M&N Studios here in New York. And with me, I've got Rick Betancourt, the NAMB president. Rick, thank you for joining us.
What's up, Andrew? How you doing, my brother? How's everything? Good?
Fantastic, fantastic. Beautiful day here in New York. Actually sunny. Gonna hit 50s today. Everything is awesome. I want to talk about, you just came out with an announcement yesterday from NAM talking about actually the suggested change in the MIPS from FHA. Let's talk about it. Very exciting stuff.
Well, I got to be honest. We have an incredible FHA committee run by one of my mentors and a great guy, John Porter, out of Washington State. And we had at our NAM National Conference, we had the FHA committee. We sat down and we said, listen, how can we affect change? How can we make the FHA loan program better, right? We feel that the way that it's structured right now with all the different Fannie Freddie products that are out there, unfortunately, FHA is maybe not getting the best credit quality. So we thought, hey, listen, what can we do, John? John and I and the committee talked back and forth, and we kind of came up with this idea of like, hey, and by the way, once I took over in October, I appointed John Porter as the FHA committee chair.
Smart.
Within about 3 or 4 weeks, he was down. We had a meeting with Brian Montgomery at FHA talking about NAM, talking about FHA relationships. So, you know what? NAM's been down there for 45 years helping out in the FHA realm, and we've got a great rapport with those guys. So we came up with this idea. We said, hey, listen, why don't we do this? Let's look at credit tier-based pricing for MI like Fannie and Freddie do, but let's incorporate that into FHA. So we're saying, well, if the FHA MIP right now is 0.85 or 0.80, depending on your down payment, well, what if we had a 3.5% payment, 3.5% down payment, 740 FICO, buy an FHA? What if that borrower had a 0.60 MI? And because it's based on credit, right? And then what if, one on top of that, what if after 3 years, that borrower paid their mortgage on time, the MI goes from 0.6 to say 0.4, and then 3 years later to 0.2, and then it stays like that. Now the MI would then readjust based on the outstanding balance.
Yes.
And you're reducing your payment, you're rewarding the consumer for proper payment on time, you're contributing to the MI fund. All around, this is a win-win.
And right now, I mean, the situation we're having adverse selection. I mean, FHA is an insurance policy, and we have an adverse selection because good quality, as to your point, as you made actually in the press release in your letter, the good quality is going to the conforming actually outlets, and the not so good quality is going to go to FHA. So we have adverse selection happening right now, which could drain the reserves on that. So it's a great point.
Let me tell you, just because you have and I don't like to say people have bad credit. I don't think anybody has bad credit. I mean, people have slow credit. I call
challenge credit.
Slow to get it. You're slow to get it to where it needs to be, right? But if you're a consumer with a slower credit score, you're in that 600 range, 605 range. So okay, your MI is 0.80, but shouldn't that person be rewarded if that payment has been steady on time for 3 years?
Yeah.
What's the risk at that point? We have a good, strong consumer. We're getting payments on time. The balance is going down. Equity is growing. So that MI goes from 0.8 to 0.6 in the same thing. But you can start with a tier-based equal reduction on timely monthly payments over, say, 36 or 48, and that consumer gets a reward. That increases their residual income, increases their cash flow during the year when their payment MI drops a little bit. I think it's a win-win. And you know what, the FHA committee, we got all jacked up, dude. We were seriously jacked up. We're like, this is a great idea. Like, we got to reach out to FHA like right now. So big shout out to Roy Deloach, our lobbyist, Ken Lindbergh and John Porter and the FHA committee putting this together. We're very excited.
Awesome. Super excited. Thank you for all you do, and appreciate you coming on to spend some time with us.
Hey, man, I appreciate you guys. You guys have been such a great partner of ours. Thank you so much, man.
All right. I'm Andrew Berman from the Mortgage News Network. Thank you for watching.
This is Mortgage News Network.